we've enjoyed just an amazing couple of years with prices and everything. And that's always been the big question, is how long can this market stretch? How long are we going to enjoy this upcycle?
Well, today, Clint Berry with Superior Livestock is back with us for our annual Cattle Outlook discussion following the recent information that was provided at the Cattle Industry Convention by Cattle Facts. So where are we in the cattle cycle right now? Have we truly stopped liquidation or just slowed it? And what do the projections say for 2026 on prices, from fed steers all the way down to 550 weight steer calves to cull cows, bred females, and we're even going to talk a little bit about the bull market. Also, the Mexico border closure. That was a big conversation piece as well. And the one factor that's very strong in our market that we need to touch on is consumer demand.
The per capita consumption rate had only changed 0.1% from last year, even though beef prices were higher.
If you're in the cattle business, stay tuned as Clint Berry and I sit down for our annual confab on the 2026 Cattle Outlook on this episode of the Working Ranch Radio Show. I always appreciate the opportunities to sit down and discuss the cattle markets and the cattle industry with Clint Berry. And today's show is no different, and I think you're going to enjoy it. Hi, everyone. Justin Mills here, host of the Working Ranch Radio Show. Good to have you with us on today's program. And for those of you that stopped by the booth at the recent Cattle Industry Convention in Nashville, Tennessee, good to see you. Good to visit with you. Hope you enjoyed the show. It was good to see so many folks down there. A lot of great information that was passed along in there. And I know for myself, from my perspective, not just from as a show host, but also as a rancher, there was some business that I had intended to get done and did in terms of visiting with different vendors there at the Cattle Industry Convention, their trade show that they had there. So hope folks enjoyed it. And again, thanks to those of you that stopped by and said hello there at the Working Ranch Magazine booth. Hey, real quick, before we jump too far down the road, Working Ranch Magazine, the latest issue is out. It is the March edition that is out. And if you want to pick that up, if you don't have a subscription, you can pick it up at your local Tractor Supply store as well. And also, if you want to and you want to do that subscription, get it started, you can go to workingranchmag.com. This issue, no different. I hate to sound like a broken record, but it is also something that we hear when folks stop by the booth and visit with us. They're just so appreciative of the magazine, the information that it provides, the articles, the stories, all of that. And of course, this time of the year, as Clint and I will talk later on in the show here today, we're going to talk bull sales just a little bit, but there's also a great listing of production sales that are going on all across the country in this issue of Working Ranch Magazine. So find it, if you don't have a subscription, workingranchmag.com, or pick it up at your local Tractor Supply store. Hey, real quick, just a couple other things as we are doing today about the Cattle Outlook in regard to some of the information that came from Cattle Max. They also provided a weather outlook as well. Next week, we will be doing that. Meteorologist Don Day will be in for a longer part of the show, and we will go through his version of the weather outlook for 2026. So be sure to tune in for that. Of course, later on in today's show, he will be giving us our long-range weather outlook just for the next 7 to 10 days. So I did want to mention that. Now, as I was talking just a moment ago, as we were all at the Cattle Industry Convention, I did have the opportunity to sit down with a lot of different folks with different facets or different products in our industry. And in the upcoming shows here throughout the next few months or so, we will be sharing those interviews with you. And I just want to kind of give you some perspective to that. Is sometimes I realize we need to do shows. We're going to be doing shows with products that are in our industry, not necessarily as a sales hit piece, but more than anything, just from an information standpoint. We need to know about these products, and the only way we're going to know about it is if we talk with those industry reps. So I've looked forward to sharing with you some of those interviews that we're going to be having, that we had while we were there at the convention here in the next couple of months of Working Ranch Radio Show. Well, let's get into our show here today. Back with us again is Clint Berry. He is out of St. Angelo, Texas, a representative for Superior Livestock. Clint, you've been on the show with us several times as we've had these discussions, and as always, good to have you back here on the Working Ranch Radio Show.
Thank you, Justin. I appreciate the chance to get to visit today.
Well, both of us were down at the recently held cattle convention that was in Nashville, Tennessee. We've done this, I think, what are we on? Like year 3, I don't know, of kind of recapping this and kind of
think that's about right.
Yeah, kind of just digesting the information or that we know or that we're hearing and feeling in the industry out there. Of course, when we were down there, CattleFax giving their annual report to the cattle industry of where they think this market's going to be looking and heading here, not only in the next year, but I even heard a number out there, and I don't know if you'd heard this. I'd kind of heard the year 32, 33 as when we might see a down cycle, the down in this market. But Clint, I think we need to start from the very beginning of this. I know where we're at in this cattle cycle. We see U.S. beef cow inventory remains historically tight. We've been in a multi-year liquidation. The conversation that's been a lot here in the last year or so is, are we seeing heifer retention taking place? And there is indication that we're starting to see that. Is that kind of what you're feeling and seeing across the countryside as well?
And you're right. We've enjoyed just an amazing couple of years with prices and everything. And that's always been the big question, is how long can this market stretch? How long are we going to enjoy this upcycle? When you talk about heifer retention numbers, I can tell you that I think we've slowed the regression. I think lowering the cow numbers has definitely slowed retention. That's probably a word that's safe to use. Rebuilding it would not be a word that is indicated by any data that I've seen, and our data at Superior will back that up too. I mean, when you analyze the data from last year at 2025, we still had heifer prices, on calves, $20-25, sometimes a little higher than that, and that's a clear indication that there's just no pressure for replacement value there.
Mm-hmm. One of the things that CattleFax described 26 as, and I do see it, I guess I kind of feel that a little bit. I think some people felt maybe last year was going to be this year, but they're calling it a transition year. And you kind of get that feeling, don't you?
Yeah, and I was kind of like you. I really felt like last year we were going to see a turn, especially late in the year, where you might see some more value driven on those replacement females, and particularly even if we didn't see a vast increase in pricing, you would have seen a less sporadic market, because it was not uncommon to see bred heifers sell with $1,000 value gap between them. Mm-hmm. That was which was an indication that even though we're in a seller's market, the buyers had the leverage when it came to that classification. And I would anticipate, as we move forward, another really good year in the books on the profit loss statement for most ranchers. There's the opportunity from a cash flow standpoint, and just long term, we've pretty much culled the cow herd about as deep as we can. We've got a great young productive cow herd, and I don't know if we're going to see vast expansion, but it is time to quit seeing liquidation. I think most producers are probably in that boat to where they've stabilized where they're going to be, and they have the opportunity, if they have the forage base, to grow if they want.
Yeah. And I think you nailed it right there on the head, in the fact that I think we've seen most of the old cows are kind of down the road now, whether it was drought that initially started that to now just thinning some things out and getting some young cows. Those have been replaced with some younger cows. So it'd be interesting if we could actually do what's the average age of our U.S. cow herd, because I think we would actually see it probably a little maybe younger than it was a few years ago. So that's just on a side note there. But as we look at expansion, and this is something even in my own mind, in our own operation too, I think about too. And my question, as you talk about it being kind of slow, and we're feeling that it's been a little bit slow, how much of that relates back to the last cattle cycle and some folks getting burned? And the question would be is, if someone hasn't expanded yet, are they late, or are they just being disciplined, or are they kind of being cautious because of what happened previously?
Well, that's true. That's pretty fresh in the mind. 2015 calls us back to a memory of seeing how fast the value can drop. So there is some freshness there. That's for sure. The wound's still there. But I think a lot of it had to do with, number one, we needed to get healthy from a profit loss statement. A lot of ranchers were operating in the red after some severe weather challenges in large parts of the country as we entered into this upcycle. And I think that's part of it. And then, there's always a transitional gap, generational gap, the turnover that's happening on farms and ranches across the country that also plays into it. And that's a bigger factor than what a lot of people it's hard to quantify that factor. That's the way I'm going to say that. Because there's a lot of producers that I've worked with, if they've got somebody that's coming behind them to transition, whether that's friends or family members or something like that that's happening. That work may be in progress, but there's a lot of producers that don't necessarily have family coming back to the ranch, and a lot of them are going to have taken advantage in this upper market to get out. And I think that overall, though, I think that's an opportunity if we can keep the ground in production for younger operators to expand, through whether that's through lease or purchase or however that looks. But I think there's a lot of opportunity out there. It has been slow to come. And yes, I would say part of that is the freshness of watching what happened, 10 years ago. But that's not uncommon in the cattle cycle. It remains very fresh in my mind.
Yeah, still a little bit raw on that. Okay, as we work through our conversation here today, Clint, I do want to continue to lay out maybe a little bit more groundwork and talk some fundamentals. And you and I were talking before we started just in terms of where our cattle numbers are at. And that is on the outside creating some problems that I think for a rancher maybe perspective, we don't know as much or are as familiar with. But there's a pretty good chunk of our cattle industry as a whole that's based upon running at a certain volume. And when we see the numbers as low as it is, we're seeing feedlots running under capacity. We're seeing the packing industry, definitely a lot more hook space than there was 5 years ago. So how, in your mind, with our numbers as low as they are and many of these running in under capacity modes, what does that bring about in your mind as we talk about that?
Yeah, you have to be conscious of the fact that while it's great to have supply driving, holding the leverage on the producer side and driving a lot of value here, you have to realize that we need a set amount of quantity to operate efficiently if you expect that the capacity to stay at normal levels, let's call it. Mm-hmm. I've seen estimates where we're roughly running at around 80% capacity in when it comes to the packing side, and that's 10% lower than what is usually considered comfortable. So, and that's with the Lexington plant being shut down in Nebraska and the Amarillo plant running to one shift. So, there's some room there that makes us a little cautious that, we could lose some more hook space, even though we have hook space coming on board. And long term, that can be very beneficial to producers because, the more ownership in hooks that we have, the greater chance at competitive bidding we might have on cattle for the long term. But in the short term, it's a little choppy there. And you're exactly right. In turn to the feeding segment, you just simply can't operate those feed yards not with full pens, or at least, there's always some leeway there, but you don't want to be operating at 75% capacity because you've got the infrastructure in place and you've got the set fixed costs and the overhead and you've got labor, and you need to be able to spread that out over dollars per head. It's no different than any other business. You can only operate inefficiently for so long before there comes a point that you're going to have to release some of that. And so it's a cautionary tale of two cities right here. It's nice to have all the leverage, but at the same time, you'd think long term, we think a decade out here, and you just don't want to lose the infrastructure we have to operate.
Yeah. That's a good way to put that. I think we got to think long term on this, and definitely the leverage is good. It's not something we've always had, but there is another side to that to be thinking about. All right, Clint, let's take a break here. When we come back, I think in this next segment, we're going to eventually get into talking about some price projections that were thrown out there. But before we do that, there's one other factor that was talked about quite a bit, and that was the Mexico border. I want to touch on that when we come back. All right?
Sounds good.
Capitalize on crossbreeding with Gelbvieh and Balancer bulls. Raise replacement females with added fertility, increased longevity, and greater productivity. Gelbvieh and Balancer influence females wean more pounds of calf per cow exposed. In the feed yard, Balancer influenced cattle offer increased performance, improved feed efficiency, and have excellent carcass merit. Balancers add the pounds, make the grade, and deliver the value. This year, make your crossbreeding count with Gelbvieh and Balancer genetics.
Imagine keeping your cattle exactly where you want them, while being able to tap into insights powered by a collar and an app. No Fence is the world's first virtual fencing system for grazing livestock. From the palm of your hand and delivered with GPS technology, you can set and move pasture boundaries, gain insight into grazing patterns, receive reduced animal activity alerts, and more. No wires, no posts, just empowered grazing that supports healthier land and your herd goals. 10,000 plus producers globally already trust No Fence. Explore the possibilities at nofence.com.
All right, Clint, before we jump into looking at some of these price projections, as I said before when we left out in the last segment, I do want to talk about another subject that was talked about quite a bit. And I think it talked about, especially in your neck of the woods down there in the southern areas of the country where there is more prevalence of Mexican cattle that come in. But definitely, as we were talking a bit ago about some of the feedlots, in addition, those guys that are bringing in cattle on winter wheat, that's been a shortage there. So all of that saying is that Mexico border has been a factor that's affected the market in 25. Now it's still closed. Nobody knows when that's going to get opened back up again, but there has been that factor that we got to be thinking about when we look into 2026.
That's exactly right. The estimates out there is since the border closing, we've had roughly a little over 1 million head of cattle that has not come across the border to be fed and harvested on the U.S. side. And that plays back to the infrastructure part we were talking about. That lack of supply has helped manipulate that lack of efficiency that they have there. And that long term, that's going to have to be addressed in one way or the other. And then if you put it all together, even if they opened the floodgate tomorrow and the border was open, we're not going to just start magically transferring 100,000s of head across the border at one time because of two factors. One, the reason the border's closed is the prevalence of New World screwworm south of there. So, I mean, it's going to be a slow movement once that opens. It's going to have to be science-based, not emotional, and there's going to have to be inspections, and it's going to be harder and slower to get cattle across than the other side. And if you think about it from our neighbors in Mexico, they have been devastated with the border closing. For all the good it's done our market, it's hurt their market on that side. But they've went back and reinvested, and they've got modern production plants up and running in the packing side, and we are shipping a lot of corn down there, and that's not all going to make tortillas for human consumption.
Yeah.
They are building their infrastructure, and if I was a Mexican, I would think that's a very good thing long term for them to where they're not as reliant on us. But I just don't think going forward, even if we get the border up and running, I just don't think that you're going to see the head counts come across the border long term as we move forward, simply because the country of Mexico is investing in itself and its own infrastructure, and they are going to start harvesting and feeding more of their own cattle there. So, I mean, that dynamic's going to change. Yes, we will take feeders in. We will return to that at some point. We get control of New World screwworm, all those kind of things with inspections. And I mean, all of that's going to happen long term. But I think the dynamics of the number of head that we used to feed is probably never going to return to that. That's just a change in the way that business model is going to operate.
Yeah. And you nailed it dead on of what we were hearing too, is that they have put quite a bit of money into building some infrastructure. Okay, one other fundamental in this, as we start talking cattle numbers, we keep referencing that we're with the lowest cattle numbers that we've seen. However, beef production is not correlating with that. In fact, what we hear is that we are seeing 52 pounds increase in carcass weights the last 2 years. Now, I want to repeat that. We've seen a 52-pound increase in carcass weights over the last 2 years. And what that equates to, this blew my mind, Clint, that equates to 2 million head. Yield grades are higher. Think about that.
Yeah. Hard to wrap your mind around that. It's a little bit like compound interest. It doesn't sound like a lot, but spread over stuff with enough time, it starts to add up. And that is not a new strategy. Every time we enter into a market like this, every time we have that, we make bigger carcass weights. That is part of the strategy to capitalize on the value and lower the cost for the packer purchasing cattle, is to incentivize making them bigger so that they need fewer. That is not a new strategy. That has been done over and over and over for generations. So I can't say that that's an unexpected strategy that would be put into place. At the same time, it also speaks really high to just the overall efficiency of us to produce the same amount of beef with less head. And that is not in any one segment's. It's a combination of all the above. It's better genetics. It's better health. it's better management, it's better packing, it's better transportation, it's better efficiency all throughout the supply chain that compound and add up and allow us to produce those kind of numbers with fewer head, on top of the fact that we're incentivized to make cattle bigger. Because I can tell you on the cattle that I feed too, that's exactly right. We are on average about 50 pounds heavier on my carcasses the last 2 years than we were the 2 years before, predominantly because they pulled the discount off of it and bumped me up. Well, I'm going to get every pound I can out of them,
Yep.
you know, as long as it's not hurting the grade, you know, that's the kicker there.
Yeah, you're right. You're right. The other thing, when we start talking about, okay, how are we getting all this beef supply to match up, even though, you know, demand's high? The other segment, 18% of our beef, do people know this? 18% of our beef come from the dairy industry. And that's going to continue to go up to a point, isn't it?
Yep, that's right. That's right.
Okay, I promised everybody we'd start talking numbers, so let's jump into that before we get too far down the road here. But so when we start looking at numbers, and when I mean numbers, I'm meaning like prices. So let's start at the fed steer price. They figure that to be around, on average for the year. Keep in mind we have highs and lows throughout the year, but if you figure the year as an average, at about $224 per hundredweight, kind of in line with what you're thinking.
Yeah, I do, and you know, I hope we can pressure that upwards for the strong demand we're having, because I'm going to tell you, some of the cattle that we sold over this past year, if we don't probably move that number at least 10 or 12 bucks upwards, there's going to be a lot of losers in those high priced calves that were bought just from on the feeder side, and that's the only fear I've got. I mean, you know, we really need to be in that 235, 245 range.
Well,
to be efficient on where we've been paying for the price of cattle. Granted, we've been able to keep our cost of gains down, and that's wonderful, but you still got to be able to come out on that.
Well, and that's a good point, because the side note to that was that they figured for a break-even price was going to be around 240 to 255. So you see the gap there.
Yeah.
Which, I mean, that's not adding up, isn't it?
I promise you, I've got some calves that if I don't get 245, I'm going to not break even on.
Yeah. So, I mean, I think that's an average. I think you got to figure, later on, we could see that a little bit different. I thought that was a little low, especially where the break-evens are at, but, we'll see here where we go on that.
That's true.
Okay, let's move down to these steers. Of course, I don't have really any heifer prices here. They didn't really talk on heifer discounts, but then I think that gets back to our first conversation and the variability there of whether or not we're really going to start to see those heifer numbers, retention in that. But anyway, so 800-pound steers at $3.35 a pound. That kind of line up with what you're thinking?
Yeah, and stop and think about that for a minute.
I know.
How here we are. A lot of us, multi-generational ranchers listen to this, and I just had a conversation yesterday with a group of producers, and I thought, what would our grandparents think about the numbers that we're spitting out? Like, it's just, normal everyday, like this isn't a magical time in the beef industry, but yeah, wrap your mind around that for a minute. 335 for an 8-weight. That's wow.
Well,
that is really good.
It is. But then there's also a few of us are saying that's all.
Yeah, that's true. Yeah, you can't ever make everybody happy. That's right.
Well, and especially when you move down, the 500-pound steer, they're figuring at $4.40 a hundredweight. That put that at $2,400, which kind of where we were at really as we this year tailed in before our illustrious president decided to start helping us out on the market space there. But on average on that, I mean, it's going to be higher than the 25 average, but it's, that's still a pretty significant number. And the gap between the 550 to the 800 is not very much.
No, that's true. In my mind, when I see that number, that just further exemplifies the fact that we're short on numbers, because on the per head basis is so tight right there. Mm-hmm. There's not that wide gap that you see when we're in I'm going to say a more standardized supply and demand ratio. And those numbers make a lot of sense. I just received the data back for the superior numbers from 2025, and our average calf price was based on a 572 pounder rounded around for all of the cattle that we were selling on the videos and stuff. And our average price was over 378. for that animal last year,
Yeah.
which was a 29% increase from the year before,
yep.
which was the second all-time high of all time.
Yeah.
We jumped 30% in 1 year, and the year before was relatively the same kind of math. It was 25% up from the year before. So I can still see some upside in that, and that $4 number it does not seem unrealistic in any way, shape, or form.
Mm-hmm.
A $2,400 calf, $2,500 calf does not seem out of line for where we are in the cycle. And that's without any real increase. That's just kind of almost holding the position we're in right now.
I think you're right. Okay, let's take another break here. When we come back, we'll talk cow prices. We'll talk slaughter cow prices. We'll talk some bread prices as well. And then we'll start getting into just consumer demand and some demand strength in this as well. So we'll be back after this, all right?
With rising feed costs and an increased focus on sustainability within the beef industry, feed efficiency is more than a buzzword. It's rapidly becoming a battle cry in an industry challenged to do more with less. By incorporating today's Limousine and Limflex genetics into your planned crossbreeding program, you can capitalize on the breed's inherent feed efficiency advantage and moderate cow size, while still banking the premiums paid for high-quality, high-yielding carcasses. That's 2 ways to profit instead of 1. Let Limousine and Limflex deliver dollars to your bottom line. Limousine today, profit tomorrow.
Horn flies stressing your cattle? Make fly control one and done with Alticid IGR XRB. Alticid IGR XRB delivers season-long hornfly control from a single application bolus, providing up to 195 days of relief regardless of mineral consumption or location. It breaks the hornfly life cycle with no impact on beneficial insects, giving you flexible, consistent control. Learn more at CargillAnimalNutrition.com/Alticid bolus.
Okay, let's move into the cow deal. And I mean, this number here, I think it's going to be as good or better. But I mean, they're saying 1,300 pound slaughter cows, $1.55. That puts that cow just a hair over $2,000 a head. I know this fall, as we were selling off cull cows, we were well over that. So again, a projected number, but that is the totality number of the herd. So that number indicating the slaughter cow prices are still going to be very, very strong.
Oh, absolutely. And it's been a long time since I heard any one of my customers mention that they sold cull cows for less than 170.
Mm-hmm.
It's been a long time. I heard some earlier in the, in the off season, in the time of year that is usually the most profitable, that we're breaking $2. Lots of $2 bulls, $2 cull cows. That number does
pretty
seem
low.
a little lower to me.
Yeah.
Right. Especially because you have to assume that they're going to get more and more challenged on having the supply of cull cows.
Mm-hmm.
I mean, the American Foods Group plant, the new plant there in St. Louis, has already announced that they're going to be doing part-time. I don't know if that's 1 day a week or half a days or what they're going to do, but they're going to start killing fed cattle because it's designed as a cull cow plant with the ability to transition and do some of that. And that's a response to the fact that it's getting tighter numbers for the cull cows, so I mean, all of those things play into effect. I think that number could really be pushed higher.
I do too, Clint. I think that's honestly, even being conservative, I think it's pretty well undershooting the deal on that. Okay, let's get into this bread market. And I know we can kind of there's a little bit of it that's, again, this is really hard to pinpoint just an exact number, but bread cow market, I don't know what you're seeing down in your neck of the woods, but you start getting into first calf heifer type prices to maybe some 3-year-olds. You're looking at 45 to as high as over 5,000 on these. And what are you seeing?
Yeah, same scenario. And it doesn't really seem to matter what part of the country it is. That number is kind of the high end stuff. And then the trouble is you still see the sporadic nature of the bread stock market, which is not uncommon until it's solidified into the, I'm going to say, the rebuilding mode, until we get a strong commitment to adding numbers, because you can see 25 or 30% value in bread stock up and down on the same day in the same location. Mm-hmm. And that's an indication that the buyers do still have the leverage there. But I've seen bread heifers sell from as low as $3,250, $3,500 to as high as over $5,000. Mm-hmm. But I've seen them marketed to where you didn't always have a buyer ready to go, but you might have 3 buyers that were willing to pay an astronomical amount for the best ones there. I think that market is really hard to tie down. but it's a clear indication of the value that's truly there. And I'm going to say, even at $5,000, I'm going to say that a young bred animal is still the best value in the beef business. If we're selling $2,500 cows and we've got $2,000 weigh up prices, it does not take much risk to buy a young bred animal and come out on that in the first year's production. Even if she doesn't breed back, I mean, you're close to breaking even right there. It's just, I still think that's the greatest value and the least risky value in the business right now. That will absolutely change and get more aggressive. It always does. It's just always the last factor to capture the value in the segments or the classifications of cattle when the market turns like that.
Yeah. Well, you answered my next question because I was going to ask you best value. So
Okay.
you did a great job of answering that question and got where I was going on that. This is something you and I didn't really talk about, and it's definitely not something that Cattle Facts talked about down there in Nashville. But and you and I have both seen this happening. It started last fall when we saw these production bull sales starting up. But the bull sale in this market has really shot up this year. And needs to be. I think it needs to reflect that. I mean, even though I have to, might have to buy some bulls this year, as much as I don't want to have to do that in a way from a writing the check standpoint, it needs to correlate a little closer to the market. The market's gone up. Last year, we didn't really see that bull market jumping high, but boy, it almost feels like it's doubled this year. What are you seeing?
Yeah, I would totally agree with that. Some of the fall sales last year, and we're just starting to get into the early spring sales. We haven't really got to the heart of the run yet. But yeah, those 50% value, that might be a little high, but I'll sure tell you 40% isn't. For years I've grown up, and I can easily remember having $3,500 bull sale averages. And if you could trade them all, that was a heck of a good day.
Yeah.
And I'm going to tell you right now, it's hard to go to an established quality program and not see a sale average with 5 digits on it. And that just sounds out of line until once again, you look at the perspective of what we're selling cattle for. I mean, rule of thumb growing up, you were always kind of told 5 good steer calves is the value of a bull. Well, I don't know that needs to be the rule of thumb, but let's just say that it is. $2,500 steer calves, 5 of them, that's over 10,000 right there. It is,
Yeah.
And so I can't say that it's completely out of line when you think about it. It's just hard to stomach the first time you see it.
Yeah. And that's just a herd range bull.
Right. We're not talking about something that, got a chance to stand at stud or anything. We're just talking about a good, solid animal. And I would tell you, the conversations I've had with a lot of my producers, just a bull that to take care. I'm not, I shouldn't say just a bull, but a bull that covers all the bases and does what you need it to inject into your program. Those animals are probably going to cost you $10,000 to $15,000 as an average price.
Yeah.
The better ones are going to cost more.
Yeah. Well, I mean, I know we've got a lot of folks that listen to the show that are, that raise and sell bulls, and they do need to make, they got to make some money in this deal too. We can't.
You sure? They sure do.
I know we'd like to be back to paying $3,500 to $4,000 on a decent bull, but the fact is reality is what it is. We all can't be kind of holding tight and expect the other guy to be pinched tight and while we're just rolling it.
No.
So
that's right. Right. Well, and that's the stimulus of all genetic improvement. It comes from the sheepdog sector, and they're going to be able to capitalize on that too. And let's be fair, when ranchers are having good years, they want to invest in the things that return money to them long term. And genetics is far and away the easiest factor to do that with.
Yeah, for sure. Okay, let's take a quick break. And when we come back, I want to talk consumer demand and kind of where that's at. And, is that going to continue to stay there? So let's do that when we come back. All right.
Yes, sir.
Calving season is a favorite time of year, but along with that special time are dangers, extra stress, and increased labor. Safety Zone calf catchers are all about safety and making processing new calves easier. Designed for ATVs or UTVs, one person can do the job and never be threatened by the protective mother cow. Make this and every calving season safer and easier with a Safety Zone calf catcher. Watch videos and customer testimonials or order yours today at safetyzonecalfcatchers.com or call 877-505-0914. Affordable and made in the USA. Make your upcoming and all future calving seasons safer, easier, and stress-free. Durable and designed to work anywhere you can drive your ATV or UTV. Order online at safetyzonecalfcatchers.com or call 877-505-0914 today.
All right, Clint, as we can't get through all of this without also keeping in mind a fundamental aspect of that, and that would be, of course, where the consumer's at in all of this. That's really the end driver in a lot of this. And it just still remains very, very high. The demand for beef, we still continue to outpace poultry and pork in that, and we don't really see either one of those, at least what CattleFax is saying, having a huge growth into 2026. But with that in mind, there is some kind of comment in there, or some things that were presented that would show that, we could be kind of topping out really on what the consumer will pay for beef.
Yeah, that's true. That's always been my hidden fear is could we price the consumer out of the market? And I'm not saying out of it like they'll never eat it again, but changing in food preparation preferences due to cost, maybe moving from the families that eat beef 3 or 4 times a week, having to go down to 2 or 3, or cutting the steaks out on the weekends and only being burger. But, the amazing thing is, even with these high prices that we've seen, and honestly, this started with COVID in 20. I never thought that we would be able to move beef at the price that we were at that point. I thought you'd have a lot of pushback, but the American consumer has demanded that they want that high quality beef, and they're willing to pay for it because, let's be fair, yes, beef is higher in the meat case, but sitting right next to it is our competition, and they have the right to choose if they want to spend half or a third less on pork or chicken, and they continue to purchase beef. And that, I think long term, that speaks to the progress we've made in delivering a consistent, high quality product that's only gotten better over the last several decades. And the research that, a lot of times the research from the checkoff that you see backs that up in consumer preference and profile. I mean, it's just, there's been such a long-term commitment by producers to make a better product that, we've now moved into a phase where there's a little bit of protection, insurance almost, because of the quality of our product, even at higher prices, for the consumer to still demand it and go to it consistently. I saw data from Sterling Marketing just this week that said the per capita consumption rate had only changed 0.1% from last year, even though beef prices were higher. And that speaks volumes to what the consumer's preference really is.
Yeah. Yep. And that's what's been, to me, I feel really speaks volumes about our product, our beef product, and the quality of our beef product is that people still want it. And as you had referenced a bit ago, kind of goes back to COVID a bit, where we saw that demand very, very strong. It continues to play out. Here we are going to 2026, and that continues to be that way. So I think that's good. The other subject that came up as we start talking about beef demand and public perception of the product was that we saw, and of course, Secretary Kennedy did present at the cattle convention, but we've seen that food pyramid get flipped over and beef being now at the top of everything. And that in itself's got to be supportive as well, don't you think?
Oh, absolutely. I mean, I'm 50 years old, and for the first time in my lifetime, we have a common sense dietary guidelines that are based on common sense recommendations. And once again, I'll go back, that speaks volumes for the product that we're delivering and the consistency and the hard work we've done to keep that message out there, to invest in the research and development, years and years of studies, most of them funded by the checkoff, but that reinvestment of ourselves back in our industry to have that data and research from a nutritional standpoint to combat the verbiage that was thrown out there as I was growing up about eat less red meat, and the worries of red meat has proven to be false accusation. And it's so encouraging to see us return to the fact that most of us have known that a wholesome, direct product like that, beef, it just delivers so much more nutrients and value into it in a per bite serving. And it's just great to see that get backed up and pushed out there like that. I mean, that was probably the most exciting news to come out of the convention, was to see that and to understand how much different that battle has become, that we've turned that corner and won the war over that side of it, to where beef is once again at the center of the plate, because we've had a lot of detractors that wanted to keep it out of there, and not for science-based information, but out of political agendas.
Yeah. One of the other things that came in, as I think Randy Block was the one that finished out that conversation, but there were a couple points that he hit that I think is important to maybe just have a brief discussion on. And some of it was back to continuing to see market access for U.S. products export-wise, and continuing to be a big driver or a big help to our industry. One of the other things that came out too was, and this was the quote I wrote down, and I know this is kind of hidden down a different road than what we just said. We need to find a solution for price discovery without government intervention. That was just a quote that he said. We need to find a solution for price discovery without government intervention. And I think it gets back to some of the sales and some of the controversy that we have in our industry. What's your thoughts on that?
I couldn't agree more. Most of the time when the government gets involved, best case scenario, it's higher regulations and more red tape. Worst case scenario, they screw up a system that was much better, even though it wasn't operating efficiently. Mm-hmm. So allowing it to be producer driven, focused on the consumer, and at the same time move at the speed of commerce is what all of us truly want. We can have our disagreements on the hows and whys, but that's what we're looking after. And Randy was exactly right in his statements. We need to find a solution for open transparency in the value of fed cattle that is correlated to the value of beef in some way or shape, without it being a mandated system. Mm-hmm. And I don't have all the answers to that. Nobody has all the answers to that, but together as an industry, we can establish that and we can work towards that, because all of the momentum is on our side right now to make that happen. And I think there's an opportunity there. I think cooler heads can prevail, and there'll be a way to do that. That's probably going to utilize a lot of the world that I operate in with the video side, just from a broadcast standpoint, whether that's animals in a brick and mortar being sold and the transparency of being able to watch, or, I don't know, there's got to be a way that we can utilize that to be more efficient in how we're doing it.
Yeah. Okay. Final question. It probably may not be the final, but final topic that we're going to hit on here. And from your perspective, as you look ahead, and I know the cattle that you market and represent, and you also feed out and do yourself, but just some thoughts, some advice that you would offer to a rancher out there. It doesn't matter whether you're a 40 cow outfit or whether you're a 4,000 cow outfit. I don't care. But just some thoughts as you look ahead and kind of prep for the year.
Well, I think enjoy it while it's good. We all have years that are tough enough. So don't be afraid to enjoy things while they're good, but a great time to invest in your own infrastructure. And that may look at grazing management or water development or better genetics or utilization of DNA technology. I mean, there's lots of ways to go through that, but I think we're sitting at a stage in the industry where we have several years in front of us. Matter of fact, in my opinion, I don't know that we've ever been at a more profitable point, and looking forward to where I think profitability is there for us to capture as an industry as a whole. Mm-hmm. We're going to have to keep our expenses in check, because while we're talking about increases in cattle values, 30 to 50%, depending on who you want to talk to and what classification it is, our expenses are not that far behind that. So we're going to have to understand that those challenges are still there. We're still operating within the margin. But, I think there's like no other time in my life, there's an injection of fresh air into the beef industry to be able to incentivize transitional changes, younger people coming back, long-term investments, and probably is going to look a lot, some expansion for those that stay in. So, I could see the average cow herds getting bigger over the next decade as far as numbers go, because we're going to have to operate it as a business. It's a wonderful lifestyle, but it doesn't work if it's not economically sustainable. And we've got to be able to do that. But I don't think we've ever been in a better position to do that than we are right now.
Yeah, for sure. Well, Clint, I think that's a good way to end our conversation. Always appreciate your perspective on this as we kind of mull this through. I think there's a lot to think through, a lot for folks, as you said, to be very optimistic in our industry as we look ahead for the coming years, and appreciate you joining us here today on the program.
You're most welcome, sir. I appreciate it too. And thanks for all the listeners. And I wish everybody a great 2026.
And again, that was Clint Berry with Superior Livestock. He is out of San Angelo, Texas. If you'd like to get a hold of Clint, you can find his contact information. If you go to Superior Livestock's webpage, you can find contact information for their representatives there. Now, something I wanted to mention is Clint and I finished up our conversation, and it didn't really come up here today, but it does bear some recognition and understanding, and that is the impact that interest rates have had in our industry as well, with them being considerably higher than they were several years ago. It sure has curbed the enthusiasm for rapid expansion to some extent. And if those interest rates can come down, you would see that process potentially help in the speeding up of that, or retaining, for that matter, of cattle for a longer period of time. So just something to keep in mind with that. The other thing, of course, we have to keep in mind imports, exports. The president now allowing more Argentine beef coming in. Something that we're aware of that. And I would also just mention, too, that next week, the Captain Tim O'Byrne is going to share with us a conversation that he had at the cattle convention with Joe Shuley, who is with U.S. Meat Export Federation, just talking about some of the exports of our products in the United States that impacts our overall price of that carcass, improving that carcass price of selling some of the products that we do not use in the United States very well. A great conversation on that. So I encourage you to tune in next week as the Captain Tim O'Byrne shares with us that conversation that we had. And finally, just one final comment, and it came up as we were talking, both Clint and I were talking about in the third segment, or the previous segment to this one. We were talking about the cost of bulls this year, and considerably higher than they were. And I just want to throw some caution out there to folks. Don't cheapen up on your bull buying necessarily. I understand we want to go back and be able to buy bulls what we have been buying them for, but when you cheapen up on buying bulls, it could be something that costs you in the long run as you're inputting that genetics into your cattle program. Those low valued or low quality bulls, that's going to end up costing you in the long run, whether you're keeping replacements or whether you're selling calves down the road. So just some caution in there. It doesn't mean you got to go overboard and be the bell ringer buyer at every bull sale out there, but at the same time, I'd also just caution folks to not just be cheap on buying bulls. Do it for the benefit of your herd and for your neighbor's herd that your bulls could get into as well. So, all right, we're going to be back with meteorologist Don Day as we take a look at our long-range weather.
Fascinated by our wild weather? Now you can learn, appreciate, and understand the weather in your own backyard with the new Tropo Rain Gauge. Having achieved the highest rating of any product reviewed by the WeatherStationExperts.com, the Tropo boasts rugged durability, impeccable accuracy, and precision to the 100th of an inch. Visit MeasureRain.com to order a Tropo today and use code RAINDAY. That's RAINDAY for free shipping and 10% off. Go to MeasureRain.com.
Today's long-range weather brought to you by long-range epronamectin. You know, one of the keys to success in the cattle business is healthy, thriving cattle. And with long-range epronamectin extended release dewormer, you're going to get 150 days of parasite protection in just one single dose. If you want to find out more about long-range epronamectin, you can head to their website at longrangedewormer.com. Well, as we turn towards our long-range weather, joining us is meteorologist Don Day. Don, of course, next week we're going to be able to have a longer format and kind of get the weather outlook for the year. But as we look currently, it does coincide with some changes that were happening. You'd mentioned that last week in your shows that we are going to start to see some change happenings. And even as we speak this particular weekend, the western part of the country starting to see some snow falling in some areas that desperately need some good snowpack.
Yeah, finally we've seen the weather pattern shift, and we're going to see the best round of precipitation along the West Coast, the Pacific Northwest, and into the part of the interior West. It's really, we got to go back really to the early parts of December to see a situation like this. This is going to really benefit California, not only with rainfall across low elevations, but a nice boost of the snowpack to the Sierras, the Pacific Northwest, which has joined the rest of the Western United States in a very, very poor snowpack season. And we're also going to see some of the key drainages of Colorado, the upper Colorado Basin, the Green River, Wind River Basin areas. get some help. And even down into Arizona, parts of New Mexico, the mountains are going to be seeing the best snow they've seen in a long time. So this is all part of a shift to where we've been talking, it seems like all winter, about one Arctic outbreak after another in the central and eastern United States. Well, they're going to see a warming trend. They're going to see not nearly as much in the way of harsh winter weather. And when that happens, something's going on. And that means the weather is going to be more directed out west.
Yeah. So when we look at that weather focus out to the west, and as we look ahead for the next 7 to 10 days out, it looks like the east of the Continental Divide is going to see maybe some bits and pieces that could flail off and get into the northern plains and maybe even the southern plains a bit. But we still kind of got a dry spot, what looked to me like around that, southern South Dakota to Nebraska to northern Kansas and into Iowa. That's kind of a strip that's not really going to be getting anything.
Yeah, that is the part of the country. And you could take this all the way to really the Continental Divide across portions of eastern Colorado, Wyoming, eastern Montana, and eastern New Mexico to those states you just mentioned, because it's an area to where they haven't really got into the Arctic fronts that have been hitting the central and the east. And these West Coast storm systems have been really wanting to be right on the coast and not going across the country. By the time they do get across the country, they're in a weakened state. So there's that middle part of the country that's been missing no matter what happens. Now, I think eventually what we're going to see is some of these Western systems will get east of the Rockies and will have a chance to become more developed. I think the odds of that going up at the end of February and early March really go up. But at least here over the next 7 to 10 days, some folks are going to get some very beneficial precipitation, and folks in the east will not have to deal with so much winter weather.
Well, Don, like I said at the beginning when we started, I look forward to our conversation next week. We're going to look at a longer term. We have you on for a majority of the show as we talk about our weather outlook for 2026. Just a real quick snippet of maybe a teaser for next week's show.
Well, what we're going to be able to start looking at is peeking into spring and early summer and kind of discussing, are the trends we've seen this winter are trends that will continue into the spring and summer season. We'll take a look at where we are in the Pacific with La Nina and El Nino, and we'll have plenty to talk about for sure.
All right. Well, good to visit with you here today, and we look forward to next week.
We'll see you then.
You bet. And again, that was meteorologist Don Day with a look at our long-range weather. If you want to tune in and follow along with him each and every day, you can go to his podcast site and find the link there to his YouTube channel at dayweather.com. Today's long-range weather brought to you by Long Range Epronamectin with 150 days of parasite protection in just one single dose. Find out more at longrangedewormer.com. How many of us in the ranching business are making six-figure decisions without knowing which parts of your operation are actually making money? Now, if you're juggling, say, a cow-calf operation, or maybe you have a backgrounding enterprise, a haying enterprise, custom grazing, throw family partners in there, I can tell you, spreadsheets and QuickBooks is going to be really tough to really show you true profitability and at the same time also keep inventory straight. With Ambrook, you're going to get real-time enterprise-level clarity. What I'm talking about is cost per head or per acre or per enterprise, plus ag-specific inventory management from feed to inputs and your livestock. You can tag transactions all from the convenience of your phone, get same-day balance sheets, and instantly see what's profitable and what's bleeding you dry. If you want to try out Ambrook for 1 month, here's what you can do. You can go to ambrook.com/ranch. You can get 1 month free trial by going to their website. Again, it's ambrook.com. That's ambrook.com/ranch. Again, tune in next week. Meteorologist Don Day will be in with our 2026 weather outlook, and we'll also hear from the Captain Tim O'Byrne as he shares with us a conversation he had with the U.S. Meat Export Federation's Joe Shuley regarding the sale of beef byproducts across the world and how that's affecting our carcass prices. Thanks for joining us. The Working Ranch Radio Show is a production of Working Ranch Magazine, branded #1 by America's Ranchers. I'm Justin Mills, and until next time, keep your chin down and your mind in the middle. So long.